Alright, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. Right, trust you've all had a great weekend, spending some quality time with your family and friends. And let's begin the brand new trading week. Right, before we begin, please take note of the disclaimer that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's coming up on the economic calendar for this week. There's quite a few things going on, but I want to bring attention to the UK claimant count change and US inflation data as well. Right, so you can see here, this is the calendar for this week. So we've also got inflation data out of China, specifically consumer and producer price indices. That's out on Monday, 9th of June at 1:30 a.m. GMT time. And then on Tuesday, we will receive the claimant count change as well as the average earnings index for the UK. That's at 6 a.m. GMT on Tuesday, 10th of June. Now, Wednesday and Thursday, we're going to see key inflation data out of the US. This will be consumer inflation data and producer price data for the month of May. And sandwiched in between, we also have GDP data for the UK. And finally, on Friday, we have the preliminary reports for the consumer sentiment conducted by the University of Michigan. Right, so you can see here, based on the forecast for May, where we can see inflation headline CPI is expected to rise 0.2% month over month in May, while core CPI is expected to edge slightly higher to 0.3%. Now, headline CPI is looking to accelerate from 2.3% in May in April to 2.5% in May, right? So we're looking at a potential reacceleration in headline CPI. Now, if CPI does come in, if consumer inflation does come in hotter than expected, we can definitely expect demand for the US dollar to pick up, right? We could see the dollar index start to rise, and also that would also cause bonds to sell off as well, right? We could see equity markets perhaps come under a little bit of pressure should we see a hotter than expected inflation data out of the US on Wednesday and Thursday, right? Even producer price index is expected to rise as well, right? After declining in the month of April, right? We can see both headline and core PPI decline for the month of April. Now they look set to rebound for the month of May. All right, so do look out for these key economic data points that will be released this week, right? We also have, remember, inflation data for China that's going to be released today, Monday, 9th of June, 1:30 a.m. And then on Wednesday and Thursday, we have CPI and PPI data for the UK, for the US, and sandwiched in between, we also have the UK's GDP data. All right, so with that, now let's move on over to the charts and trading view and begin the analysis on the dollar index. But before that, let's take a quick look at what had happened last Friday, 6th of June, right? So last Friday, the Bureau of Labor Statistics released the highly anticipated non-farm payrolls report along with the unemployment rate. And we actually saw a pretty strong labor market report last Friday. So we saw non-farm payrolls rising or adding 139,000 workers to the US economy. In May, this was notably higher than the forecast of 126,000. However, April's figures were revised lower, right? I believe they were revised down to, just let me take a quick look. Right, April's figures were revised significantly lower, right? April, initially we saw 177,000 jobs being added to the US economy in April. However, in the latest report, we are now seeing that figure being revised lower, down to 147,000. Right, nevertheless, it was still a pretty robust labor market report, as we saw 139,000 workers being added to the US economy, noticeably higher than the forecast of 126,000, while the unemployment rate remained unchanged at 4.2%, and we also saw average hourly earnings increase as well, rising 0.4% month over month, higher than the previous month's figures as well as higher than the forecast. All of this would have served to increase demand for the US dollar on Friday, and at the same time, of course, cause bond yields to sell off as well, right? As a stronger labor market, right, would uh, would help with the overall economy as well, right? Okay, so let's with that now let's move on over to the charts and trading view and begin the analysis on the dollar index, of course. Right, we'll work our way through some of the major currency pairs, the commodities, the indices, and crypto as well. And of course, should you have requests for any other instruments, do not hesitate to drop them in the chat box, and I'll be more than happy to go through the analysis with you. Right, do not wait till the end to drop your requests, drop them in as soon as possible. All right, so here we are. So this is the chart for the dollar index. I'm on the daily time frame, but let's quickly switch on over to the 30-minute time frame and take a look at what happened at 12:30 p.m. GMT on Friday, 6th of June. So this white vertical line here denotes 12:30 p.m. GMT. Oh, hang on, it's this candle here. Oh, there we go. Yeah, 12:30 p.m. GMT is this vertical dotted line here, and that's when the Bureau of Labor Statistics released its non-farm payrolls report alongside with the unemployment rate. And we can see here, dollar index initially dropped lower, right? Dollar index was initially hovering around was initially floating around 99, around the 99 level, before dropping about 12 pips, dropping down to as low as 98.88. Remember, we also saw a downward revision for April's figures, right, from 177,000 down to about 140,000. However, we saw May's figures point to a pretty robust reading. So hence, right, we saw the dollar index initially drop as low as 99.88 before reversing swiftly and rising as high, or rising to a Friday's high of 99.35, right? Remember, a robust labor market report would help stimulate demand for the greenback, right, causing dollar index to rise, and that's what we saw last Friday, right? So we can probably expect the dollar index to remain elevated as markets kick off trading today, right? As markets resume trading today, we can probably expect some level of demand for the dollar index to remain in place, some level of demand for the US dollar to remain in place, and that would mean the dollar index is probably going to remain elevated at around present levels and perhaps continue to edge a little bit higher. So now let's switch back over to the daily time frame, and when we look at it on the daily, we can see that last Friday was a pretty strong rebound for the dollar index. And we can see it just Friday alone, the dollar index had rebounded as much as 0.7%, rising about 65 pips in the process here. And from Thursday's close, yeah, it's about the same as well. So you can see a pretty strong rebound for the dollar index last Friday, and we can probably expect this momentum to continue as markets resume trading today, right? So we're probably expecting demand for the dollar to remain somewhat stronger than usual, and that could keep the dollar index elevated and drive it higher towards what I see as a swing high resistance, right? When I look at the level of 100.54, it was a swing high resistance that was formed on Thursday, 29th of May, and this level is also accompanied by not one but two Fibonacci levels. First of all, we have a Fibonacci retracement. Now, this retracement was found by beginning from this swing high on 12th of May, going down to the swing low on the 5th of June, and we can see that the retracement at 61.8% aligns very well with the swing high resistance that was formed on 29th of May. In addition, we also have a Fibonacci projection. This projection level was found beginning from point 1, 21st of April, Monday, going up to point 2, 12th of May, Monday, and ending at point 3, which was last Thursday, 5th of June. And we can see that the 61.8% projection sits at around 100.85. So we have a pretty strong resistance barrier identified by a Fibonacci projection at 61.8% and the Fibonacci retracement at 78.6%. All of this sits pretty highlights an area where a swing high resistance was formed on 29th of May. So this is how the pivot has been identified as a swing high resistance, accompanied by a Fibonacci confluence. That confluence consists of a projection and a retracement. So we can probably expect the dollar index to continue to edge a little bit higher, and if it were to continue, and if it were to reach this swing high resistance where the pivot has been identified, this is probably where we can expect it to stall once again. Right? Take note, when looking at this index on the daily time frame, we can see that it continues to form a series of lower highs and lower lows, all highlighting the ongoing downward trend. And at the same time, we can see that this index continues to trade underneath the red Ichimoku cloud here, red Ichimoku cloud here, highlighting the ongoing bearish momentum. Right, in terms of support, right, we can see very clearly dollar index stabilizing above 98.32 last Thursday before staging a pretty nice rebound on Friday. So very clearly, this has bounced off a prior swing low support that had been formed in the third week of April. Right, so this is where the dollar index managed to stabilize once more last Thursday and stage a very nice rebound on Friday. So very clearly, the first support at 98.32 is a multi-swing low level. And in terms of resistance, right, beyond the pivot, remember the pivot itself is a swing high resistance accompanied by a Fibonacci confluence, but beyond that level, I also can spot another key barrier, overhead barrier at 101.78. When we zoom out a little bit, we can see this level is a very significant overlap. We can see that back in September of 2024, this level functioned as resistance not once but twice, in first week of September and in the middle of September. And then fast forward to April of this year, we can see this level function as pretty strong support, with dollar index bouncing off this level on the 3rd and 4th of April, and then again on the 9th as well. And very clearly, after breaking underneath this level proceeded to function as resistance quite nicely in mid-May, right? As the dollar index retraced higher, in the first half of May, it ran into resistance at exactly the overlap level at 101.78. So we can see very clearly this level is a very significant overlap, which we have identified or labeled as the first resistance. Right, so just to recap for the dollar index, these are the key support and resistance levels on the daily time frame. Pivot at 100.54 is identified is also a resistance level that's identified as a swing high resistance, accompanied by Fibonacci retracement at 61.8% and a Fibonacci projection at 61.8%. And we saw last Friday's BLS employment report highlight a pretty robust labor market data, and that could increase some near-term demand for the US dollar, and that could keep the dollar index elevated and push it higher, climbing higher towards the pivot at 100.54. Right, but however, remember, significant overhead pressures remain for this index as it continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. And at the same time, of course, we can clearly see a series of lower highs and lower lows, all highlighting the ongoing downward trend. All right, with that, now let's move on over to the euro. We'll touch on the euro, dollar yen, and the Aussie before we switch on over to the commodities as well. All right, taking a look at euro, of course, if the dollar index rebounded pretty strongly on last Friday, we can definitely expect the euro to be heading in the opposite direction. Right, we can see the euro from Thursday's close to Friday's close dropped as much as 0.4%. Or 0.45%, dropping about 50 pips in the process. So if you're expecting dollar index to continue to climb higher, right, we can probably expect the euro to pull back as well, right? So as markets resume trading today, and we can probably expect the euro to pull back and slide lower. Right, we can see here almost a nice V-shaped rebound taking place between since 14th of May, and we can see that last Thursday the euro's running into resistance or close to resistance at 1.1512. I can see a 1.1512 was a swing high resistance that was formed in the third week of April, and that is where the euro seems to have stalled pretty much exactly last Thursday, 5th of June, right? And the robust non-farm payrolls figures has created or triggered near-term demand for the US dollar, and that's going to cause the euro USD, the currency pair, the euro USD, right, to pull back a little bit more. So I would also like to highlight this. There's a pretty decent ascending trend line for the euro here that begins from mid May. So keep an eye on this ascending trend line as well, right? Because if this level gives way, right, if this ascending trend line gives way, we are likely to see a slightly deeper pullback for the euro, perhaps all the way down towards the pivot level at 1.1079. Now take note, this pivot level here is identified as an overlap, right? We can see back in the second week of May, a very significant swing low being formed here, and prior to that we saw the euro running into resistance at around this level in the first week of April. So this creates a very nice overlap, which we can identify as the first major support, right? The first major support is an overlap level, which has been identified as the pivot. And this level is also accompanied by Fibonacci retracement at 38.2%. So we found this retracement by running from this swing low on 13th of Jan, going up to the swing high here on the 21st of April. And we can see that the 38.2% retracement sits just underneath the overlap, which is where the pivot resides. And slightly below, then we can see another decent swing low being formed on 27th of March, right? And it's also accompanied by a Fibonacci retracement at 61.8%. Right, so remember, demand for the dollar looks to be is expected to remain relatively strong as markets resume trading today. And keep an eye on this ascending trend line for the euro, because if this ascending trend line gives way, we are likely to see a much deeper pullback for this currency pair, perhaps dropping all the way down towards the overlap level at 1.1079, which is where the pivot has been identified. And we can also see, right, on the longer term trend that the euro has made a series of higher highs and higher lows, pretty much, right? And we can see that it continues to trade above the green Ichimoku cloud, which highlights the ongoing upward momentum as well. Right. In addition to the Fibonacci retracement at 38.2%, we can also spot a 78.6% projection at 1.1079. This projection level was found beginning from this swing high at 0.1, 21st of April, going down to the swing low on 12th of May, and ending with a swing high on Thursday, 5th of June. We can see that the 78.6% projection also sits pretty close to the overlap level, which is the pivot at 1.1079. So the pivot is an overlap level accompanied by not one, but two Fibonacci levels. So we have another Fibonacci confluence within this zone, and that's being identified by a retracement at 30.2% and a projection at 78.6%. Alright, okay, so with that, that's for the euro. Then let's quickly move on over to dollar yen, and then we'll take a look at the Aussie, and then finally before touching on the commodities as well. So looking at the Aussie, right, we can see that it shares a pretty similar market structure with the dollar index, of course, right? We can see a series of lower highs, lower lows, and also a pretty strong counter trend rally that had occurred between in early May as well, right? For dollar yen, right, pretty much very similar market structure, very clear series of lower highs, lower lows, and this very strong counter trend rally that we saw in the first half of May. Now, of course, we can see the dollar index, the dollar yen, since the second week of May managed to stay above 142.40. So very clearly a very strong support barrier has been formed since the second week of May. We can see dollar yen making the first significant swing low on the 7th of May, the second significant swing low on the 26th of May, and the third significant swing low in early June as well. So what we have here at 142.40 is a multi-swing low support that has been identified as the pivot, and which is where we saw dollar yen rebound very strongly last Thursday and Friday. right? You can see here for pretty much most of last week, right, the first week of June, which is last week, we saw the dollar yen manage to stabilize above 142.50 before staging a very strong rebound on Thursday and Friday. And you can see here this rebound was as large as 1.5%, with dollar yen rising over 200 pips. As you can see here, we can probably expect this rebound to continue, right? Demand for the US dollar could remain elevated, and that would keep dollar yen pushing higher as well, right? So it has made a bullish reversal of the pivot last Thursday, and we can probably expect the upward momentum to continue this week, right? We can probably expect this upward momentum to continue this week. I would also like to point out this little resistance barrier here, right? There's a nice swing high resistance that was formed on Thursday 29th of May, so do keep an eye out for this level as well, because if we do see dollar yen being rejected around this level, we could see it remain constrained perhaps between 143 and 146, right? So this is a swing high resistance that's also accompanied by Fibonacci retracement. Let's see, let's check it out. Let's run the retracement from this swing high on 12th of May, going down to the swing low on the 27th, and we can see that the 61.8% retracement sits pretty much exactly where the swing high was formed on 29th of May. So do keep an eye out on this level as well. This is also a little bit of a resistance barrier, intermediate resistance barrier for the dollar yen. Now beyond the intermediate resistance at 146.28, right, this is a swing high resistance accompanied by Fibonacci retracement at 61.8%. We have a very significant swing high that was formed in middle of May. So 12th of May, we saw a significant swing high resistance being formed here, and this level is also accompanied by Fibonacci retracement at 17.6% and a Fibonacci projection at 17.6%. So the retracement level was found beginning from this swing high on 28th of March, going down to the swing low on 22nd of April, and that's where the 17.6% projection or retracement was found. And in addition to that, there's also a projection level that we used. This projection was found beginning from point 1, 22nd of April, going up to point 2, 12th of May, and ending at point 3, which is 27th of May. And we can see the 78.6% projection aligning pretty close to the 78.6% retracement, as well as the swing high resistance itself. Right, so the first resistance at 148.45 is a swing high level that's accompanied by not one but two Fibonacci levels, and of course in between we have an intermediate resistance barrier at 146.28, which is a swing high resistance accompanied by Fibonacci retracement at 61.8%. And beyond the pivot, right, the pivot was a multi-swing low support at 142.40, which has been in place since 7th of May. And there might be a Fibonacci retracement. Let me try it out. Right, let's try it out. Let me run the retracement from this swing low, 22nd of April, going up to the swing high resistance on 12th of May. Let's take a look at the 78.6% retracement. Right, and we can see the 78.6% retracement sits just slightly below the pivot as well. Right, and beyond the pivot, which is a multi-swing low level at 142.40, we have another significant multi-swing low at 139.58. We can see back in September of last year, right, as the dollar yen was falling rapidly, right, as it was falling rapidly in the second half of 2024, it finally stabilized. It dropped as low as 139.58 before stabilizing around 1.4050 and staging a very strong rebound. And this is pretty much exactly where the dollar yen once again found its footing in the third week of April, dropping as low as 139.88 before stabilizing around 1.4080 to stage a very strong counter trend rally. So that's how the first support at 139.58 has been identified as a multi-swing low level that has been in place since mid-September of last year. Right, so these are the key levels for the dollar yen. right? It has managed to stay above its most recent support, which is the multi-swing low level at 142.40, which is accompanied by Fibonacci retracement at 78.6%. We've seen a strong rebound since last Thursday, and this upward momentum could continue as markets resumes trading today. However, take note, there is an intermediate resistance barrier identified by this swing high at 146.28, which is also accompanied by Fibonacci retracement at 61.8%. Alright, now with that, let's move on over to the Aussie. Right, we can see the Aussie making a very strong V-shaped recovery in this first half of April, and since the second week of May, I would say it's sort of consolidating within this box here, right? We can see it's sort of consolidating within this range. Right, within this range with support at the lower bound at around 63.60 cents and running into resistance at the upper bound at around 65.30 cents here, right? So after staging a very sharp V-shaped recovery in the first half of April, the Aussie has ranged within this box and looks to be edging a little bit higher, running into resistance close to 65.40 cents, not once but twice. We can see it first running into resistance on 26th of May, Monday, and then of course as recently as last Thursday, 5th of June. So this level here, right close to 65.45 cents, is a very significant overlap level that's accompanied by a Fibonacci retracement at 61.8% and a Fibonacci extension at 127%. This retracement level was found, of course, running from this swing high on 30th of September, going down to the swing low here on 9th of May. We can see the 61.8% retracement sits at 65.49, and the Fibonacci extension at 127% was found by running a retracement from this swing high on 3rd of April, going down to the swing low on the 9th of April. Key extension levels set at 127 and 161%, and we can see that the combination of the extension at 127%, the retracement at the 61.8%, and of course the overlap level itself at 65.45 has identified a pretty strong resistance barrier for the Aussie that looks to have been in place since 7th of May, right? You can see since 7th of May, this level or this zone has functioned as pretty strong headwinds for this currency pair, and it looks to be rejected once again last Thursday. And of course the stronger non-farm payrolls has helped to inject some higher demand for the dollar, the US dollar, and this has caused, of course, the Aussie to pull back slightly on Friday. So we can probably expect this currency pair to continue to slide lower, right? Continue to edge lower, edging towards 64 cents, right? And the first major support that I see for the Aussie is at this pullback level here at 63.28. This level previously functioned as pretty strong resistance in the first week of April, and after breaking higher in mid-April, this prior resistance is likely to function as a support level, which is also accompanied by a Fibonacci retracement at 38.2%. Now this retracement is not so clear at the moment, but let me try and point it out. We found this retracement level right beginning from this swing low on 9th of April and going up to the highest point. Let's see, the highest point, I believe, was on Thursday, 5th of June. So that's how we found the 30.2% retracement. So the pivot level is a pullback support at 63.28, accompanied by Fibonacci retracement at 38.2%. Right, and in beyond the pivot, the next major support for the Aussie sits at this multi-swing low level at about 61. Actually, I would say before that, the next major support would be at this swing low, and beyond the pivot, the next major support would be at this swing low that was formed in the first week of March. Right, there may be a Fibonacci retracement that we could use as well. Let's try and check it out. Let's take a look at this retracement once more and look at all the fibs. Right, and we can see that a 50% retracement sits pretty close to the first support, so let's keep that level on. So I'm going to keep 20, 38 and 50% in the analysis here. and highlight the first support as a zone between the 50% retracement and the swing low that was formed in the first week of March. Right, so take note the Aussie has made a reversal, right, a bearish reversal since last Thursday, and this robust employment report by the Bureau of Labor Statistics, right, where we saw a nice increase in non-farm payrolls while the unemployment rate remained unchanged, has injected some near-term demand for the US dollar, and it has caused the Aussie to pull back last Friday. Right, we can see here off Thursday's high, the Aussie has reversed as much as almost 0.7%, dropping just over 40 pips in the process. So we could probably see a further pullback for the Aussie materialize today, right, drifting towards edging lower towards the 64.7 mark, right. 64.7 mark is looks to be a pretty decent level to watch out for as well. But beyond that, the first really significant major support level looks to be at around 63.28, which is this pullback level accompanied by a Fibonacci retracement at 38.2%. Alright, now let's move on to the commodities, beginning with gold. Right, XAU USD is an instrument that tracks the spot gold futures, and we can see that this precious metal has run into resistance at around $3,385 per ounce in the first week of June. Right, we can see that this level has kept prices in check pretty much for most of last week. And of course, with demand for the dollar picking up last Friday, we saw gold prices pull back as well since Thursday's high. Right, gold has dropped as much as 2.8%, right, drifting towards $3,300 per ounce. Right, so we can probably expect overhead pressures to remain for this precious metal, and we could see spot prices drift towards or dip under $3,300 per ounce. Also, I would like to highlight, right, there's a pretty decent ascending trend line here, right. You can see that spot prices have respected this ascending trend line, first on 29th of May and then on the 30th of May, and this level was being tested last Friday, right. It looks to have broken underneath it last Friday, and if demand for the dollar continues to remain strong this week, right, we can probably expect this precious metal to remain under pressure, and especially after breaking through this ascending trend line, we can probably expect a much deeper pullback as well, right? We can probably expect a much deeper pullback, perhaps all the way down towards the overlap at 3,132, which is where the pivot has been identified. We can see here this level forming a very nice swing low bullish reversal on 15th of May, and prior to that, it actually functioned as a swing high resistance in the first week of April, right? So after reversing off this level on 15th of May, it creates a very nice overlap that we can identify as the pivot, and this level is also accompanied by not one but two Fibonacci retracements. We have the first retracement at 61.8% and the second retracement at 38.2%. Right, the first retracement at 61.8% was found by running a Fibonacci retracement from this swing low on 7th of April going up to the swing high on the 22nd of April, and we can see the 61.8% retracement sits at $3,164 per ounce. The second retracement was found by beginning from this swing low here on 14th of November and ending with the intraday all-time high. Right, take note, this high here on 22nd of April is the intraday all-time high for spot prices, and we can see the 61.8% retracement sits slightly below the first support. First support at $2,954 per ounce is an overlap level that's accompanied by a Fibonacci retracement at 61.8%. Right, and of course resistance, right, the first resistance at $3,430 is a multi-swing high level, and we can see that this level has been in place since 22nd and 22nd of April and 6th of May, right. You can see a very nice multi-swing low level at 3,430, which spot prices has remained under since 6th of May. right? So on the longer term trend, we can see gold prices have climbed higher, right, rising from about $2,570 per ounce in mid-November of last year to as high as 3,500 in the third week of April. Since then, when we can sort of see that gold prices have remained sideways, right? They're trading within this box here. Of course, it's a relatively wide range, but we can see sideways trading, right? We are not really seeing any clear bullish momentum as what we saw since mid-November, right? We're actually seeing sideways consolidation within a relatively wide level, with gold prices stabilizing above $3,150 per ounce on the lower bound and running the resistance at around $3,430 on the upper bound here. Right, so we're experiencing some sideways price action for this precious metal, but it is a relatively large one as well. As we look at it here, from peak to trough, this range is as large as 9.2%, right? Pretty wide range here. Nevertheless, gold prices remain elevated, right? And if this ascending trend line gives way, we can probably expect this precious metal to slide lower, right? Perhaps maybe dropping it down as low as $3,200 per ounce, or maybe even within this vicinity of where the pivot and the Fibonacci confluence resides. Alright, so with that, now let's move on over to XTI USD. Right, this is the instrument that tracks the WTI crude oil futures. As you can see, oil prices have come under significant overhead pressures, especially since mid-January, right? 20th of Jan was when President Trump was inaugurated into the White House, where he signed off on a bunch of executive orders, and the key one for energy commodities was the bill or the executive order to expand oil and gas production in the US. So that was one of the primary catalysts for energy prices to come under pressure. Remember, 20th of May was President Trump's inauguration, where he signed off on a bunch of executive orders, including the one to increase oil and gas production in the US. So this was done, right, to ramp up production so as to keep energy prices under control, or to help keep energy prices lower as well. Right, so this was all aimed at keeping overall inflation low, right? If energy prices can drop lower and remain depressed, that's going to have a positive impact on inflation, right? We're going to see CPI and PPI continue to moderate lower, right? So that was one of the primary reasons for expanding oil and gas production in the US. And with that, we've seen crude oil prices drop rapidly as well, right? We can see from its peak in mid-January, the XTI USD initially fell as much as 19.5%, right? This is a huge drop in a couple of months, right? Dropping 19.5%, staging a very strong counter trend rally by the first week of April, rallying as much as 10.4%, before swiftly reversing and tumbling as much as 24% as well, right? And we can see here, since 10th of April, right, crude oil prices, XTI USD, was somewhat ranging within this relatively wide range of $55.60 on the lower bound and $64.70 on the upper bound here, right? This was a pretty wide range, right? If you look at it from peak to trough, it's as wide as 13.7%. However, right, with demand for crude oil somewhat stabilizing in the third week of May, right, we can see XTI USD finding support over $60 per barrel since 15th of May, and perhaps the stronger non-farm payrolls is going to act as a pretty strong bullish catalyst for this commodity as well. Remember, a robust US labor market would signify a pretty strong US economy as well, right? And if the economy remains strong, demand is expected to be relatively stable as well, and that would all help commodity prices, particularly crude oil as well. Right, so we could see crude oil prices climbing higher, and I would say that keep an eye out for this near-term resistance barrier, right? This near-term resistance barrier for XTI USD at $64.15 could be a good indication for an upside confirmation level, because if XTI USD can break above this near-term resistance at $64.15, we can probably see a good run towards the pivot. Right, the pivot for XTI USD is a pullback resistance at $66.66, which is also accompanied by Fibonacci retracement at 61.8%. Now, this retracement at 61.8% was found beginning from this swing low here on 2nd of April, going down to the swing high from 22nd of April, swing high from 2nd of April, going down to the swing low on the 9th of April. Right, we can see the 61.8% retracement accompanied a pullback level at 66.66. You can see that previously this level functioned as a multi-swing low support all the way from September of 2024 till March of this year. Right, we can see XTI USD stabilizing above this level several times from 11th of September till 9th of December. Very clear multi-swing low support back then, and we can see some support as well taking place in the first and second week of March. Right, of course we can see XTI USD dipping as low as $65.35, but nevertheless this is a region where we've seen crude prices hold up. So the pivot previously was a very strong multi-swing low level, and then once that level got taken out in the first week of April, it is now likely to function as resistance, and it's also accompanied by Fibonacci retracement at 61.8%. So take note, the pivot at $66.66 is a pullback resistance that is accompanied by a Fibonacci retracement at 61.8%. Right, now higher up, we can see a very clear swing high resistance being formed on 1st of April, and this level sits at $71.18, and it's also accompanied by a Fibonacci retracement at 61.8%. This second retracement was found beginning from this swing high on 15th of Jan, going down to the swing low here on the 9th of April. Right, we can see the 61.8% retracement sitting very squarely with the swing high resistance that was formed on the 1st of April. Right, so all prices have remained under pressure for most parts of this year. However, we've seen some consolidation take place, especially since mid-May, and we can expect this commodity to climb a little bit higher. Right, perhaps the combination of the stronger than expected non-farm payrolls last Friday and the beginning of the peak summer driving season in the northern hemisphere, right, particularly in North America and in Europe, we could see demand for crude oil start to pick up noticeably, and it could keep prices elevated at least over the next couple of weeks as well. Alright, so these are the key levels here for XTI USD on the daily time frame. Now let's move on over to the indices. Let's start with the DAX. The 40 is an instrument that tracks the DAX futures, and we can see this instrument make a very strong V-shaped recovery right after dropping as much as 19.9%, right, almost falling into bear market territory in the second week of April. However, we saw the DAX stabilize around 19,580 before staging a very strong rebound. Right, we can see this rally here from trough to peak. Last Thursday's peak was as high as 31% or 30%. Right, very strong V-shaped recovery for the Germany's DAX. Right, remember the 40 is the instrument that tracks the DAX futures, and this index is showing very strong upward momentum, right? And I suspect it could make a good run towards the pivot. The pivot at 24,749 has been identified by a Fibonacci extension at 127%. Right, take note, right? The latest intraday all-time high for the DAX was formed last Thursday, 5th of June. We don't have any other level that we can reference from the past. In such a scenario, we can rely on Fibonacci tools such as Fibonacci extensions to help us identify the next potential resistance barrier. So we found this extensions by running a retracement. Let's see, this is 74.80. Yep, from this swing high on 18th of March, going down to the swing low on the 7th of April, and we can see the extension at 137 and 161%. So we've used these extension levels to help us identify the pivot and the first resistance. So we can probably expect the DAX to make a good run towards the pivot here, and it could probably stall around this level and make a slight pullback. Not sure if it will drop all the way down to the first support at 23,422. Right, take note this level here is a key overlap level. Previously, of course, this level functioned as a double top. Right, we can see a very nice double top being formed on 6th of March, and then again on 28th of March. This was a multi-swing high resistance that had been in place till the second week of May. We can see the DAX running the resistance here in the first week of May, and after breaking higher on the 12th, we can see it functioned almost like a double bottom here. First bounce on 15th of May, second bounce on 23rd, right? And since then, we've seen this index continue to remain elevated. Right, so very strong upward momentum for the DAX. And the green Ichimoku cloud also highlights on the ongoing upward momentum and of course bullish momentum as well. Right, so these are the key levels for the DAX here on the daily time frame. Then let's move on over to US 500. Right, US 500 is the instrument that tracks the S&P 500 futures, and we can see a very similar V-shaped recovery for this index as well. Of course, it is yet to make a new all-time high. Remember, the prior all-time high, intraday all-time high for US 500 was formed on Wednesday, 19th of Feb, and that level sits at 6,147.60. Right, we've seen a very strong V-shaped recovery since April, right, and we can spot a very nice overlap level at 5,796. Right, we can see US 500 bouncing off this level very nicely at the end of May, right, making a very nice swing low bounce here at the end of May. And when you look across this level here, this is actually a very significant overlap. And we can see the first swing low rebound taking place on 20th of December, second swing low bounce taking place on 14th of Jan of this year. So this created previously a multi-swing low support which got taken out in the second week of March. And as this counter trend rally was being formed towards the end of March, we can see the US 500 running the resistance here on the 26th. So this creates a very nice overlap level, which once again got taken out on 12th of May. The bullish momentum took out this overlap resistance on 12th of May before this level functioned as very nice support on the 23rd. So what we have here at 5,796 is a very significant overlap level, which we have identified as the first support. Right, on this upward trend, let's see if we can run a couple of Fibonacci retracements. Let's check it out from here. This swing low on 7th of April going up to Friday's high. Let's take a look at all the fibs. Right, and on this retracement, don't really see any of the levels sit close enough to the first support. That's fine. Let's try and see if we can run the second retracement from this swing low on 21st of April going up to the high here on 6th of June. In this case, we can see the 23.6% retracement aligned very well with the first support. However, take note, right, if we see US 500 continuing to climb higher today, right, as markets resume trading and we see this index continue to climb higher, take note that this retracement at 23.6% would no longer be valid. Remember, as long the high that was formed last Friday was at 6,016, and if we see this index climb higher as markets resume trading today, right, this retracement is no longer going to be valid. So remember to remove it from the analysis. However, if we do see equity futures pull back slightly, right, and we don't see 6,000 and we see 6,016 remaining as the high, then of course this retracement level is going to continue to remain valid. Now the pivot at 6,122 has been identified as a multi-swing high resistance, right? This is almost like a triple top here. First swing high being formed on 24th of Jan, second being formed on 31st of Jan, and of course the third one being formed in mid-April, right? Very clear significant resistance barrier at around 6,122, which has been identified as the pivot. Now beyond the pivot, which is a multi-swing high resistance, we have a Fibonacci extension at 137%, helping us identify the next resistance barrier. So the next resistance barrier sits at 6,514.17. Right, so this was the next resistance barrier that was identified by Fibonacci extension at 127%. We found this extension by running a retracement from this swing high on 19th of Feb, going down to the swing low here on the 7th of April. Right, so here seeing very strong upward momentum for US 500, and we can probably expect equity futures to continue to climb higher this week, right, especially if there's no further breakdowns in trade negotiations between the US and its major trading partners such as China and the European Union. So take note, as long as negotiations continue to point to positive outcomes, right, and we don't see any significant breakdowns in trade negotiations, that's likely to keep equity markets supported, and we could see this index, right, US 500, or this instrument US 500, continue to climb higher towards the pivot at 6,127. Right, let's move on over to Bitcoin. Right on cue as well. Let's move on over to Bitcoin. We'll wrap things up by looking at Bitcoin and Ethereum, and we can see Bitcoin has reacted off a support level at 101,330 last Thursday and Friday, right? The pivot at $1,152 has been identified as a multi-swing low support. This we can see here, Bitcoin stabilizing above this level since middle of May, and as it fell quite sharply on Thursday, 6th of June, it managed to stabilize around this level before staging a pretty strong rebound last Friday, and that upward momentum has continued over the weekend as well. So what we're looking at is a very strong bullish bounce or bullish reversal for Bitcoin off its pivot. Pivot is at $101,052. It's a multi-swing low level, which we have seen a nice rebound materialize over the weekend as well. So Bitcoin looks to be rising towards its intraday all-time high. This swing high resistance that was formed on 23rd of May sits close to the intraday all-time high that was formed on the 22nd of May, which is at $112,021. So we are likely to see Bitcoin resume the upward climb towards the first resistance. Now, we've also run a Fibonacci retracement from this swing low on 7th of April, going up to the intraday all-time high on 22nd of May. Let's take a look at all the fibs. We can see that, okay, there's no retracement, it sits close enough to the pivot. However, we do see the 50% retracement sitting just underneath the first support. The first support is a very significant overlap, right? We can see Bitcoin stabilizing around 94,700 in middle of February this year, and after breaking lower at the end of Feb, it ran right smack into resistance in the first week of March. As you can see here, very clearly a very significant overlap level that had been in place till 1st of May, right? This was an overlap resistance that had been in place since the 1st of May, and after that, after breaking higher in early May, Bitcoin managed to stabilize over this level in the second week of May before staging a pretty strong rebound. So very clearly, 194,700 is a very significant overlap level, accompanied by a Fibonacci retracement at 50%, and that's how we've identified the first support. Right, and since this bounce here in the second week of May, Bitcoin has climbed as much as 18.9%. However, the pullback that we saw since the end of May till early June was as deep as 10.4%, right? A pretty strong correction here, 10.4% correction. And since then, we've seen a nice rebound materialize, and we can probably expect a very nice rebound, maybe another nice 10% bounce, rising up close to 110,000 once again for Bitcoin. All right, now let's wrap things up by taking a look at Ethereum. Right, Ethereum is being lifted up by strong sentiment for the crypto space, specifically by Bitcoin as well, right? Although we can see here, Ethereum has yet to recover from its highs of December last year. Nevertheless, it has remained elevated since middle of May, right? It has managed to stabilize above $2,400, right, since 18th of May. So we can see here 18th of May, the pivot at this level is a multi-swing low support, right? It's a multi-swing low support that has been in place since the 18th of May. And with Bitcoin looking to rebound higher, right, that's likely going to lift the entire crypto space and pull up Ethereum with it as well, right? So Ethereum has rebounded off the pivot, and we can expect it to rise towards the first resistance, which is probably at this level here, right, which is at $2,811. This is a multi-swing high resistance, like the most recent swing high resistance for Ethereum was formed here on 29th of May, and we can see resistance being formed here as well from 7th till 24th of Feb. Right, I don't think there's a Fibonacci retracement that we could use. Let me just quickly check it out. Wonder if there's a Fibonacci retracement that we can use on this downtrend from 16th of December of last year going down to the swing low here on 9th of April. Oh, actually there is a 50% Fibonacci retracement that we can use. There we go, right? Pretty nice 50% Fibonacci retracement that aligns close to the multi-swing high resistance at $2,811. A pretty strong overhead barrier here that has been in place for Ethereum since middle of May. Now in terms of support, see a very nice overlap at 2,084, right? A nice swing low bounce here taking place on 4th of Feb, consolidation here as well in early March, then resistance here on 21st and 26th of March, and of course after breaking higher, this overlap level could be the next major support beyond the pivot. So the first support at 2084 is an overlap level that's also accompanied by Fibonacci retracement at 50%. Right, so you can see here this retracement level was found beginning from this swing low on 9th of April, going up the swing high here on the 29th of May, and we can see the 50% retracement aligning very well with the first support. Right, let me just quickly take a look at all the fibs. Is there anything that aligns close to the pivot? Nope, don't really see anything that sits close to the pivot. Remember, as Ethereum dropped underneath $2,456, the retracement at 23.6% is no longer valid, and 38.2% is simply no man's land, so we don't really need that either. Alright, so let's just keep 50% retracement on. Alright, so that's all I've got for you guys today, right? So these are the key levels for Ethereum here. Looking for a nice rebound, or a continuation of the rebound since the weekend. Similarly for Bitcoin as well, reacting off the pivot, making a very nice bullish reversal or bullish bounce off the pivot, and we can probably expect the upward momentum to continue to lift this coin higher towards the first resistance. DXY, right, dollar index, we saw demand for the US dollar return last Friday, right, due to the stronger than expected non-farm payrolls figures, right? That could keep demand for the greenback elevated this week and perhaps continue to nudge dollar index higher towards the pivot, which is a swing high resistance at 100.54. Right, crude oil prices could be supported by the stronger jobs figures as well, right? And if we can see a clean break above the upside confirmation level, which is at around $64.18, we could see this commodity make a good run towards the pivot, which is at around $66.66. Gold prices could continue to pull back deeper, right? If demand for the dollar remains strong, we see the dollar index climbing higher. That's going to weigh on gold prices, and especially if this ascending trend line gives way, we can probably expect a much deeper pullback for this precious metal, right? And equity markets, equity futures for Germany, for the DAX and US 500 look to remain supported as well. All right, that's all I've got for you guys today. Thanks everyone for tuning in to today's pre-market analysis brought to you by IC Market. Do look out for all upcoming webinars for the remainder of this week, right? We've got a combination of educational webinars and live analysis in not only in English but in Thai and Bahasa as well. All right, thanks everyone. Take care. Have a great trading week, and looking forward to catching all of you at the next session. Alright, just going to quickly launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and of course then we'll wrap things up. Right, there we go. And before we switch off, take note, right? It's not we don't really have a very heavy macroeconomic calendar for this week, right? We've got inflation data out of China today, Monday, 1:30 a.m. GMT time. We're going to take a look at consumer and producer price index. We are expecting further deflation for both of these inflation metrics, and that could doesn't really bode well for China's economy. We also have consumer inflation data and producer price index for the US being released on Wednesday and Thursday, right? So it's inflation week data in the US, so keep an eye out on that. And sandwich in between, we also have UK GDP data as well. Alright, that's all I've got for you guys today, right? Thanks everyone for tuning in, and do look out for all upcoming webinars for the remainder of the week as well. Alright, thanks everyone, take care, and have a great trading week.